minute to display my screen and we are good to go. So we're in week 7 of the diet. No, week 8. Last week was week 7. Yes. Last week was week 7. So we're in week 8. We have just 4 classes left together. After today's class, we have just 4 classes left together before our live class. So I believe all what we have done so far, we have revised and we are good to go on them. So once you can see my screen, I think I'm sharing my screen already. Once you can see, just give me a 222 in the chat box. Let's get that quickly. Okay. Sorry, can't display your screen. I don't know what's happening. So once you can see my screen, just go to the chat box and give me 222. Let's see. Okay. Please, once you can see my screen, go to the chat box. Give me 222. All right, Margaret, good luck. Thank you so much. Thank you so much. That means that you can see my screen. S.O. Hajibo, thank you so much. All right. So let me put it in display mode or read mode rather. All right, so as you can see, we're in week 8 of the diet, and as you will agree with me, gradually the diet exams is actually drawing closer. Today we will be looking at something called sundry standards. I spoke about this last week, that we'll be looking at sundry standards today, and those sundry standards includes IAS 26, IAS 41, IFRS 6, IFRS 14, IAS 32, and lastly we have IFRS for SMEs. IFRS for SMEs. So when it comes to sundry standard, why do we first of all let's ask ourselves? Can someone just tell me, because I spoke about it last week, I broke it down briefly. What do we mean by sundry standard? Because if you check your syllabus, this site is there. If you check the Ican pack, you see it there, that particular chapter. Sundry standard, Starry's sundry standard. Someone just unmute and say something about this, or probably you want to go to the chat box and type. Just raise your hand and unmute, and we are good to go. You know, I don't like to be the only one talking in class, so that's the major reason why I always kind of engage everyone so we get to talk. All right. No one can tell me what sundry standard means. Are we microphone shy? If you can't unmute, just go to the chat box and type what you understand by sundry standard. I need at least one response to know that we are well prepared. No one has gone through the video lectures, because if you have gone through the video lectures, then you should have all of this readily at hand. So you just briefly tell me. I think I'll start calling names, right? I think that'll be better. Probably because of I'm taking online class. That's the major reason why, you know, it's not like the way I take my physical class. Those that know me physical class, there's no how you be my class and you not contribute. And this is something I've been doing for, that's been helping students, right? So you can't dodge my class, you can't hide. Like I do say, I welcome all responses. All responses. In fact, as a matter of fact, I want you to tell me, I don't want you to tell me the correct thing. I want you to tell me a wrong thing. Because if you tell me the wrong thing, I will know that there's something that we still need to do. And of course, you can still correct that. You can make mistakes now. The only time you will not be able to make mistake is inside the exam hall, right? Do your mistake. I want you to do mistake, because if you do not do mistake, you cannot attain mastery, right? Mistake is very important for mastery. Mistake is very important for mastery. What did I say? So I want you to tell me something that is wrong. So if you tell me something that is wrong, I correct you. You know it's that actually stick up there. So that's the essence of. I remember a particular diet like that I was in my SFM class. I was actually taking, was it not capital structure theory, traditional Modigliani and Miller's M&M. Okay, so I asked students about the M&M and all of that, and okay, I asked about capital structure theory, and the person that gave the answer was actually turned it upside down M&M has the way that they have their own formula. M&M proposition one, proposition two. So the person just mixed the whole thing upside down like that. So it made me even go in depth on it and explaining how we can actually use capital structure theory, even in mergers and acquisition, understanding of it. And as a matter of fact, that particular diet, Ican tested a question, a merger and acquisition question that needed you to use Modigliani and Millers to actually value that particular firm, to value the particular firm. So you see, it was quite funny because it's because of the way the person actually twisted it. The person mixed proposition one and maybe proposition two. I can't really remember. There was something that the person did. So it made me even explain beyond what I was meant to explain that particular day. And, I linked it up to how you can actually use Modigliani and Miller's proposition one and proposition two, doing your valuations and all the probably cost of equity, or probably you want to use it to get value of the firm, right? So it really helped that diet. And when the student came out and said, "Oh, wow," so ICANN can be very unpredictable at times. So it's always good to talk, say what you know. Even if it is wrong, you are good to go. So I think someone is saying something. Joy, thank you so much. I feel sundry standards are standard that are not that significant. All right, that's a good response. Thank you. I welcome that response. Does anyone want to try again? I don't want to dwell much on this because um, in recent times, this is one area that I can have not really tested questions on. In fact, as a matter of fact, in this um, let me say, syllabus, this current syllabus started in 2019. So they've not tested, as a matter of fact, they've tested only one standard. Yeah, only one standard here in everything that we're looking at here, which is IAS 41 agriculture. So that the fact that they've tested only one does not mean that we should throw it away. So thank you so much. I love that particular. They are not that significant. But the thing is, from the angle of sundry standard, when we talk about sundry standards, first of all, let's break it down. What is sundry? When we talk about sundry, going by it denotes, various items that are not important enough to be, you stopped. If I want to give you 5 marks, I'll give you 2.5 marks because you just stopped at they are not significant, right? You didn't put context to non-significance of it, right? The reason why we say they are not important or they are not insignificant is because we do not see them as being significant enough to be able for them to be mentioned individually. So you see IAS 16 in the pack, they mentioned it individually. IFRS 10, IFRS 8. Please don't look with IFRS 8 to operating segments. Thank God I even made mention of that. So it's just like operating segment. When we are doing operating segment, there are some particular segment that we consider a reportable segment based on some particular threshold. If you still remember that, please do not joke with IFRS 8. I'm telling you, please. I can use to test it. IFRS 8. So that's operating segment. So that's the same thing we are talking about here. There are some particular standards that we cannot list them individually because they are. If you look at IAS 26, for example, IAS 26, there's a similar standard that is looking at that is actually explaining IAS 26 already, and that standard is what IAS 19. So why IAS 26 when there's already IAS 19? But the thing is that there's a IAS 26 just gave us a theoretical guide on how IAS 19 works, right? IAS 19 was very voluminous, talking about different post-employment benefits, short-term employment. You remember all those things that we did in class that we grouped it under three: the short-term and the long-term. Then we also have termination and all of that. So, but when it comes to IAS 26, that's accounting. Okay, I didn't write it here. Accounting and reporting by retirement benefit plans. That's the standard. Accounting and reporting by retirement benefit plan. It just gave us, it provided guidance on the accounting and reporting requirements. So that can you see, it did not put any calculation, just accounting and there's no much calculation. IAS 29 treated majority of the calculation, right? But IAS 26 just gave us, guidance on accounting and reporting requirements for retired benefits plan. It still came down and still told us some of the types of plans that we have. What are the types of plan that we have? Let's use this as a revision. Can someone unmute? I don't like the turnout. I don't like the responses. Even the same thing happened in my revision class. We should not. The reason why we are in this class is normally I've said it several times that I should not be lecturing in this class. I should come here and be answering questions that you have read, right? That you have watched the video lectures. Okay, you are not clear on this. Let's talk. Let's shed more light on this area. So that is what this class is for. In fact, this first diet where we are holding Google Meet lessons. Before we used to hold, many of us that have been with Starry Good for long, you know that we normally meet on Telegram, right? But the management wanted a situation where students and lecturers can have a face-to-face interface, right? Where they can communicate, when they can talk, they can shed more lights on it. That is the major reason why we are doing this. So if I come to this class, don't expect me to lecture. That's why you see that many times I throw questions just to refresh us. So who can actually help us? What are the two types of plans that we have? You know, IS 26 is just talking about what something similar to what IS 19 spoke about. So it should not be something new. Types of plans. No one to help. No one to unmute. Or go to the chat box. Just type it if you cannot unmute or talk. I'll wait. I'll wait for us to do that. What are the types of plans that we have? Okay, let's move on. No one is saying anything. Okay, so IS 26 also spoke about the key requirements, and it spoke about under those key requirements, it spoke about the inclusion in financial statement for the plans. It spoke about the evaluation. Then it also spoke about the disclosures, that is detailed information about the plans, including the actuarial present value and of promised benefits, which they said should be disclosed. So I will not dwell much on that. I believe we know it. So I would move to IS 41, agriculture. IS 41, I believe we have not done this before. So IS 41, please pay attention to IS 41. Please, I'm begging you. If you have not been paying attention, pay attention. I would just give us in literal way and make us understand this. I will not rush it. Now, when we talk about IS 41, it sets out the accounting for agricultural activity. You ask yourself, some of those, you go to a farmland, you see their crops, you see their animals. How do they recognize assets inside their books? Right? For a company that deals in agricultural activities, right? How will they present some of these things that they are doing? You will see normally, even in when we are doing inventory, IS2, you tell you, oh, inventory, this item, we are actually keeping it to be sold, right? Isn't it? So they'll tell you some of the cost components of an inventory, how to estimate inventory of work in progress, inventory of finished goods, and even inventory of raw materials, right? So, but how does these people, if we say some of these things cannot work for them, right? We need a standard to guide them. Imagine a farmer now who has 10 ram, he has cocoa plantation, and he wants to present his financial statement. How will he capture this? Or how would he recognize revenue? Are we getting it? So IS 41 was very needed because of, I believe some of us here probably must have engaged in farming activities. So you understand some of these agricultural activities. So that is the major reason why we established IS1, just to it set out the accounting, IS 41. It sets out the accounting for agricultural activity, which includes the transformation of biological assets. When we talk about biological assets, it's going to involve living plants and animal. I spoke about this before. Their transformation into agricultural produce, right? So at times they will still be at the living plants or maybe animals, how they are being transformed into agricultural produce, which means when we talk about agricultural produce, it refers to harvested product of the entity's biological assets. So those biological assets, imagine your ram gives birth. How does the standard tell you to deal with this? Can you see the transformation? So your animal that is giving birth now, or your plant, your tree that is sowing fruit, is a biological asset. It could be living plant. So biological asset could be a living plant and it could be an animal. Now, how does did they tell us to account for those agricultural activities? That's the transformation of those biological assets into agricultural produce, because it's those biological assets that we turn into agricultural produce altogether. So what's the objective of IAS 41? IAS 41 was set up to enhance the is to establish standards of accounting for agricultural activity, the management of the biological transformation. Can you see I keep making mention of the management of transformation of biological assets? So there's a major thing there, transformation of biological assets. That is, they are being transformed, either the living plants or probably the animals, they are being transformed into agricultural produce, which those agricultural produce are harvested products. The milk that your cow is producing, is it not an harvested product? You sell it, right? They are harvested produce. Now, what's the scope of IAS 41? IAS 41 applies to biological assets with exception of bearer plants. So please note that bearer plants have been exempted from this particular standards, right? So let me go again with that. IAS 41 applies to biological assets with the exception of bearer plants, agricultural produce at the point of harvest, and government grants, agricultural produce at the point of harvest, and government plant grants related to these biological assets. Please also know that it does not apply to land related to agricultural activities. So if you are saying, oh, this land that we have acquired, we need to classify it. It's agricultural. Yes, 41 of IS 41 did not say anything. It has exempted that particular land. Of course, where would that particular land be treated? Let's go to the chat box. Let me see if we know what we are doing. The land that you are actually using, that land, right, that is related to the agricultural activity that you are using, which standard takes care of that? Would actually take care of that. Then IS 16, thank you. Property, plant, and equipment. So it's going to take care of that. Then it also does not relate to intangible assets that has been derived from agricultural activity, right? Which standard will take care of that? Intangible assets related to agricultural activity. Omali Mary, please continue the good work. Let me see if you are still with us. So which standard will take care of that in relation to intangible assets? Which standard will take care of that? Let me see. No one is actually. Thank you. IS 38. You are smoking hot, man. You are smoking hot. IS 38, intangible assets. So, and also it does not relate to government grants related to bearer plant. Of course, bearer government grants in relation to probably there are some particular bearer plants that you have that the government is actually have given you some bearer plants that the government have given you grants in respect to. So it has exempted it from that particular. Where will they be treated? Let me see. Where will they be treated? Let me see. Let me see if we are actually. I thought we have actually done that standard, but let me see if we can actually say, okay, we have done it. We have actually gone through it. Thank you, Aja Johnson. You guys are smoking out. Thank you very much. Grant, IS 20. So those government grants are related to the bearer plant and even the bearer plant itself, but it does not apply to produce growing under those bearer plants. Please note that it does not apply. I'm going to break all of this down. There's no need to rush. There's no need to actually panic. So it does not apply to produce growing on bearers plant. And you had also noticed that all these exemptions that we have spoken about have been treated under their specific individual standards, like maybe the IAS 2, IAS 16, IAS 38, IAS 20, government grant. Thank you, Margaret. Good luck. So now let's define some key concepts here. I know I've been talking about biological assets, bearer plants, this and that. Now let's define some particular concepts here, because we need to understand these concepts before we can then say we want to actually apply them, right? We need to understand those concepts very well. Now let's talk about biological assets. Biological assets relates to a living animal, a plant. If I say, oh, this particular asset is a biological asset, it means that if it is not an animal, then it will be a living plant. So if you go to probably those of us in the north, you go to a farmland and you see cow, you see cattle and all of that. They are referred to as biological assets because they fall under the animal category of biological assets. And if you see a plant, probably you see some people, there's a particular banana tree in our compound, in my family's compound then. So that particular banana tree, once, you know, it keeps giving, you know how banana tree works. So they keep up, when you plant one, I don't know how it works. I'm not an agric person. You notice that before some time, and that one is already growing by the side from the roots, spreading. Before if you don't take time, the whole compound will be full of banana, right? Banana tree. So those particular plants, those living plants, right? Emphasis on living plants, because you cannot make use of a dead plant, right? It should be a living plant. So it is actually considered as what? As also a biological asset. Now let's talk about something else. Another very important thing. If you're actually following, give me a thumbs up. Give me a thumbs up if you are following. I don't want you to snooze. I don't want you to snooze. Give me a thumbs up if you are following. Thank you so much, Margaret. Good luck. Thank you. So let's move on. I want us to talk about bearer plants. Now, I've been talking about, I even said something that, those particular grants in relation to bearer plants, or even the bearer plants, but not bearer plants. Someone is asking what IFRS 14 is talking about. Okay, so I'm still talking. I've not even gotten to IFRS 14. I'm still under IAS 41, but I guess you want to just understand what's IFRS 14. Just hold on, we'll get there. So IFRS 14 is just looking at regulatory deferral accounts. Regulatory deferral accounts. And IFRS 14 permits first-time adopters of this particular standard to continue to account for, regulatory deferral account balances in accordance with their previous gap. We'll talk about, when we say regulatory deferral accounts, those accounts are expense or incomes that are deferred for future recovery, or probably for future settlements, through future tariffs or rates. So I'm still going to briefly talk about that. But if I end up not talking about it, because there are a whole lot to talk about under this particular sundry standard, even IFRS for SME is another very important aspect to consider, right? I'm someone that actually consults for SMEs, and at times you deal with some particular you deal with some particular SMEs that you see. Okay, for example, now does an SME that does SME, there's a particular SME have do you think there's a standard for financial instruments for SME? Is there any standard for financial instruments for SME? No. So it's there are some particular standards that when you are actually dealing with them, you cannot relate with them the same way they are actually they are in their respective standards. If you notice something, many of the standards that they are dealing with, they will usually apply to listed companies or medium or big size companies, right? So it's very important that we consider IFRS for SMEs, right? So I lecture IFRS diploma, those that are sitting IFRS diploma, and I noticed one trend that they do not joke with this IFRS for SMEs in their exams, right? So I don't know why I can't tested it before, but I don't know why they've not really given it so much attention. If I were to be an examiner, I would just do something on it, one of those diets, shock students, because students don't really prepare for IFRS for SMEs, right? So as you know, it's there are about 24 standards for IFRS for SME. If I'm not mistaken, there are about 24 to 26. I can't really remember that. So let me go back before someone raised a particular Zabif, or let me raise a particular issue on IFRS 14. So let me go back to IES 41, right? Now, let's talk about bearer plant. Now, bearer plant is a living plant. Please, there are some particular things that you need to pay attention here. The definition of, if you don't understand how this works, please, don't even think about saying, if you see IS 41 inside the exam, skip. Don't near it. If you don't understand how or definition of bearer plant and some other things that we'll be talking about works, just keep it, because this will help you to solve the questions, right? So an IS 41 is one of those questions that you can easily pick up and solve in the exam, and you have scored your mark and you have left. So bearer plant is a living plant that is used in the production or supply of agricultural produce. Bearer plant, that's one, is used in the production, is a living plant Can you see? Bearer plant is a living plant. I'm not saying animal. Bearer plant is a living plant that is, one, used in the production or supply of agricultural produce. Two, it is expected to bear produce for more than one period. So if you have any bearer plants that not bear produce for more than one period, then you know what that means. Okay. So, and three, has a remote likelihood of being sold as agricultural produce, except for incidental scrap sales. Has a remote has a remote likelihood of being sold as agricultural produce, except for incidental scrap sales. So at the end of the day, maybe you have a particular bearer plant, right? Maybe let me say, for example, ugu. Ugu does not use to produce seed that you can use to replant. Ugu will produce seed, and it is used for the production and supply of agricultural produce, isn't it? Is expected to bear produce for more than one period, right? Can ugu bear produce for more than one period? I don't know. I'm not a farmer, right? But if ugu can bear produce for more than one period, then to qualify as a bearer plant, isn't it? So it has a remote likelihood of being sold as agricultural produce. At the end of the day, you still pluck your ugu and go and sell it in the market. So if you think ugu can bear produce, or it can actually is expected to bear produce for more than one period, then it will be considered a bearer plant. So these three conditions must be met. Don't say one. If you want to classify a particular plant as a bearer plant, then it must meet with these three conditions that have actually definitions that I've actually outlined. And that one is agricultural produce. When we talk about agricultural produce, those are vested products from biological assets, right? They are the one. So one funny thing is that your bearer plants can still fall as a biological asset if it is a living plant, isn't it? So so you can see can you see the tricky thing about it is that agricultural produce is from your harvested products, but at the same time, I can say agricultural produce can come from your bearer plant. That is, if those particular bearer plants are seen as biological assets. Are we getting what you are trying to say? So agricultural produce is the harvested product from biological assets, isn't it? So, okay, let me just do something. My admin is right here. I need to display some slides before I move on. It's very important for me to display some slides. Sorry. So we have our weekly Ican questions. Those of you that have not joined the members area, or those of you that are still having issues joining the members area, just, can you see the numbers on the screen? You can call or chat those numbers up. Let them add you to the members area. It's very important because if we have, as I'm talking about bearer plant, all these things are ES41. There's a particular question that we have put in the weekly Ican question group. That's the members area that will make you understand these things very well, right? That will make you understand it appropriately. So do yourself that favor, do chat the admin up, or you can access the admin on this particular website here, or this particular link here, and you are good to go to be added to the members area. If you are not in the members area, then you are snoozing. I'm telling you, because it's almost 30 days to the exam, and we will start sharing the 30 days success blueprints, which you can use to actually prepare for the exam. So you don't want to miss that. Trust me. We share the end of diets mock questions. We also going to share solutions and questions relating to the live class questions. So if you are not there, you are snoozing big time. So Ican video lectures also, those of you that have not gotten your Ican video lectures, then we also have past questions that have been treated. We've solved it. It's different from you opening your Pathfinder and you're just seeing, different solutions. This one is different. Someone is explaining how certain figures have been gotten. So it's not like you are just opening the Pathfinder and you get nothing is there and all of that. You are just trying to maneuver it your way. So everything has been well solved. Every gray area has been dissected, so you are good to go on that. Please, research shows that students who solve more questions have more tendency of passing at one sitting. So please do yourself that favor of chatting with the admin on these numbers displayed, or actually on these links that we have provided here. All right, back to, I've done that, admin. So back to IS41. So what are some of the examples of agricultural produce? We could have grapevines, we could have oil palms, tea bushes, rubber trees. Um, we could those are examples of bearer plants. Yes, you might want to take that some of the examples of bearer plants. We can have grapevines, we can have oil palms. Yeah, don't you feel that those oil palms, that's what we used to do the palm oil. You can get it there, and they are actually expected to produce for. Please don't forget one key thing, that anything you want to consider as a bearer plant must have the tendency of doing what is expected to bear produce for more than one period. If it cannot bear produce for more than one period, it's not a bearer plant. Oh. It is not a bearer plant. Please forget about it. Right? So grapevines, oil palms, I've given an example, even tea bushes, rubber trees, yes, they are all examples of bearer plants, and they are expected to bear produce for more than one period. Now let's talk about biological assets. I spoke about it briefly at the beginning, so we will still talk about it now. All right. I hope you are following. All right. So let's look at biological assets. Biological assets, like I said earlier on, are plants and animals. Meanwhile, bearer plants are used in the production and supply of agricultural produce. You might want to ask me, what is the difference between bearer plants and also biological assets? That's what I'm trying to break down now. When I say biological assets, they are living plants and animal, right? But when I say bearer plant, of course, a bearer plant can also be a biological asset. That's one thing you need to understand. Meanwhile, bearer plants are used. That's the key word. They are used. That means that they bear produce, right? They bear produce. That's why we call them bearer plant. That's why we call them bearer plants. So one major distinction is that they are always producing agricultural produce for more than one period. Please, let's note this. So when you call something a bearer plant, it produces produce for more than one period. So that's a bearer plant, right? Now, when we are looking at agriculture, IS 41, we used to consider the cost to sales, right? Which actually talks about the incremental costs that are directly attributable to the disposal of an asset, including the finance cost and even the income tax, right? I will also talk about this later, because at times, even after the produce are ready, we'll still incur some costs, right, on those particular produce. So we'll talk about it. Now let's look at the initial recognition. Initial recognition. An entity recognizes a biological asset or a biological produce only when the entity controls the assets as a result of past events, and it is probable that future economic benefits will flow to the entity. And of course, the last thing, the fair value or cost of the assets can be measured reliably. So I spoke about three things. One, if they can control the asset as a result of past events. Two, if it is probable, the rule of thumb, 50%, that the future economic benefits will flow to the entity. The thing that I want you to know is that most of the time when you say you have control, then that means that you can actually control the economic benefit that are coming to that entity. So control comes with you know um flowing of economic benefits in the future, because if you do not have control, there's no how you can accrue to yourself those economic benefits that are coming in the future. Then lastly, if you can determine the fair value or the cost of the assets reliably. So those are the on initial recognition, that is how to recognize your biological assets or agricultural produce, right? So measurements, let's look at measurements. Biological assets that falls within the scope of IS 41 are measured on initial recognition and at subsequent, reporting date at fair value less estimated cost to sale. That's why I said something that I just briefly gave us a guide on when we talk about cost to sale, the estimated cost to sale. So the major thing to consider here is that at all time, whether it is on initial recognition or it is at subsequent reporting date, what we normally recognize it at, it's at the fair value less the estimated cost to sale. Can you see that it's different from some standards now? So some standard will tell you recognize it at fair value, but this one is telling you to recognize it at fair value less estimated cost to sale. But there's also an exemption to this, except if the fair value cannot be reliably measured. Are we following at all? So, the gain on initial recognition of biological assets And definitely when you say you are recognizing at fair value less cost to sell, there will be a gain, right? Isn't it? So you just say fair value less the cost of selling that particular biological agricultural produce, right? So or biological asset. In the recognition of those biological assets, there will be a gain, all right, when we measure at fair value less cost to sale. And the changes in the fair value less cost to sale of the biological assets during the period are usually included in the profit or loss. What do I mean? Once you on initial recognition, let's say this particular biological assets, the fair value is 200,000, then the cost that we have used to enhance that particular that when you say costs of to sell, it means that all those costs that you will incur to readily bring it to the position that will make it sellable is what you should consider, whether it be taxes, whether it be transportation costs, whether it be whatever, just name it, right? So it is very important for you to consider it and deduct it from the fair value when you are recognizing it on initial recognition. Of course, there's a question. Well, I'm just, some of these things I always like to deal with it with questions. If you have a opportunity to be under my physical class, you will know that I like questions so much. In fact, normally I would have just come and put a question on the board and I'll use it to explain some of these concepts, right? But anyways, it's still good, right? It's still very good, right? So those gains, whether it be on subsequent measurement, because of on subsequent measurements, you still consider the fair value less cost to sell. I love IAS 41 so much because whether it's be on subsequent measurement or initial measurement, you are still or subsequent recognition or initial recognition, the same way you are actually valuing it is the same way you are still going to value it, right? But note something, that any that you are having will be taken to profit or loss, right? So it will be taken to profit or loss. So again, on initial recognition, for example, maybe as a result of harvest of agricultural produce at fair value less cost to sale, you are included in the profit or loss for the period in which it arises. Sometimes some people can say it's similar to the recognition criteria in IAS IAS 2, but are they similar? What's the recognition criteria in IAS 2? Let's go. Let me see. Once in a while, I need to be throwing all of this to us to know how we are prepared or how we are preparing. What's the recognition criteria in IAS 2? Okay. So item of inventory are expected to be measured at what? Lower of what? All right, let's move on. So please note that all costs related to biological assets that are measured at fair value are recognized as expense when they are incurred. So once you have actually, please, who is this? Can you unmute? Omali Mary. Sorry. Okay, someone is saying something. Lower of cost. Not all. It is not all. It is lower of cost and net realizable value. Right? It is lower of cost and net realizable. It is not all. Please kindly change that. All right, let's move on. Okay. So I was saying something the other time that is always, please note that any cost that you have incurred that is related to that biological asset and they are measured at fair value are recognized as an expense when you incur them. Let's say, for example, the cost that you have actually incurred in bringing a particular farm product to where you are going to sell it, you are going to expense it, even with apart from the fact that you want to recognize that particular asset, biological assets, you say fair value less cost to sell. At the same time, you still need to expense those costs that you have incurred, right? Other than the cost to purchase the biological asset. In as much as it is not the cost to purchase that biological asset, you need to expense it. Of course, the cost to purchase that biological asset to be what? It will be capitalized. So IAS 41 actually presumes that fair value can be reliably measured for most biological assets. But there's a particular presumption, that particular presumption can be repeated for biological assets that at the time it was actually initially recognized, they do not have a particular quoted market price or probably a quoted market price in an active market, and for which there's no alternative fair value measurement that can be determined to clearly so it means that it is clearly unreliable. So what I'm trying to say is that There are some, IS 41 just presumes that, oh, at all times you should be able to determine the fair value of those particular biological assets. But at the same time, it's also said something that how will you be able to determine the fair value of some biological assets that does not even have a quoted price, right, in an active market, or it does not even have an alternative fair value measurement, right, that is being used to determine that particular valuation. So it means that it is clearly unreliable. And in such case, what did they tell us to do? If you are now, I'm saying my own, because of at times Ican can come and tell you that, oh, it's not every time that you're expecting calculation. Ican used to say, okay, you are an intern or a graduate trainee in so company, and a client of yours is into the farming business and they don't understand how to go about the recognition of biological asset and all that. So the partner now give it to you that you should prepare a report that will be presented when you are discussing with those clients. So do you understand some of these things? That's how I can test question. They will not. Do you think at the professional level, I can tell you that define biological assets or define BRR plants? Later, someone will say I can is hard. But when they are telling you to prepare a report, many people that wrote CR last diet, they would relate with me that if you do not understand, if you don't know how to write a report, then you are gone. Almost all the questions last diet had reports. You're a professional already, right? So you should know how to write a report. At this level, if you don't know how to write a report, please fall back to your Pathfinder. You will see it there. There are a lot of reports that have been written that you can actually pick it up from there. So different types of, depending on the type of reports that you're writing, maybe external or internal reports, or even it's a memo, right? So what is it trying to say there? The standard is trying to tell us that once you cannot determine, someone is raising their hand. Do you want to say something?
Yes, sir. I want to say something, sir.
Okay, sir.
Please, sir. This point that you raise issue, please, sir, is a case study. How is a maybe as a suggestion to Hardet for
Okay.
as you are to talk. Please,
Okay.
sir, maybe on that a day or 2 days to that time to share a lecture for live lecture like this.
Okay. Life
Please,
class. Okay.
live class, please, sir. Because last diet, the thing really happened to me. As you just mentioned it now, that every paper last diet is all about
Reporting.
report.
Yes. Yes. Yes.
Even case study that I was even thinking that I do almost best. It was
Hmm.
returned back to. So, but
Sorry about that, sir.
because this eventually my FM, I pass FM. Even FM that I was even thinking that I'm not going to even pass, I pass it. But sir, this matter of how to write a report, please, sir,
Hmm.
it need to be addressed. It need to
Okay.
be addressed. Maybe like that a day, 2 days to, so that you can be we can be always be guided on it. Please.
Okay. Okay, sir. What I would do,
Thank you.
thank you for calling my attention to that, sir. So what I'm going to do is I would request the admin on my live class, my own. Normally, this thing does not only talks to CR, it talks to all courses. Yes, many of us are root last diets. You see that icon is shifting report. They keep telling you to write reports and all of that. So what I would do is that I would integrate my live class questions are already set. I've submitted it to the admin. My live class questions or everything that for the diet, I've sent it to the admin since before the diet started. What I would do is I would not say I want to start teaching you how to write a report, right? But I would include a question, like 2 or 3, or let me just say 2, that would have us to write the reports, and I would make it different types of reports, whether it be internal or external reports. So that way we can then use it to address those particular area or how to write a report. So I think that's the
Ah,
best thing to do.
I'll be
So
very grateful for that. I'll be very grateful for that, sir. And
yes,
on that, on some days, 2 days or 3 days to exam that you only give us a live class. Thank you, sir.
yeah, yes, sir, no problem. So we are going to I can't remember my live class questions again. I'll just go and check my archive and see the live class questions that I tested, that I sent to the admin, to the management. So I would check. Normally, I would integrate it. I trust myself so much on that. I would have integrated it, but I would want to be sure that it has like two different types of reports. So thank you for calling my attention to that, sir. So our time is really going. I really wish I can finish this agriculture, because I don't know why my spirit keeps telling me that they will test this diet. I don't know why that they test agriculture this diet. So please, if you can do it about it, please ensure you can. If we are unable to finish it in this class, exhaust yourself on agriculture. I'm not saying you should not read others, read others, but exhaust yourself on agriculture. You see, IS 41, I can't love it. I don't know what's happening for a while. I don't know what's really happening. I can't remember when last IS 41. Can anyone help with when last IS 41 was tested? I can't really remember. So I don't know why. I don't know. I doubt you can really dodge it this diet. So that's why I'm taking my time now. You get. So now I spoke about the fact that there are some particular fair value, like there are some particular biological assets that you can easily get their fair value, but some you cannot easily get their fair value. So what is the standard telling us to do when you cannot easily get the fair value of biological assets? For example, if let's say what can I use as an example? Let me see. You have a bearer plant. Let me say you have a bearer plant. Let me call that bearer plant a moringa tree, and you're actually selling the produce, but there's no active market for moringa. No one has known active market for moringa, right? Now, how will you determine the fair value of that moringa? Because there's no active market, and there's no any alternative fair value measurement that you can use to determine the value that you believe is reliable enough for you to determine the value. So in that case, the asset IS 41 says that the asset should be measured at cost less accumulated depreciation and impairment losses. I hope you got what I'm trying to say. So if you get into the exam owner, they are telling you that, oh, the assets does not have any. Do you think the Ican will tell you that? Wait, do you think Ican is so dull and will tell you that, oh, it does not have any fair value? There's no how we could actually that the assets cannot get the fair value of the assets. They will just tell you something like, oh, the asset does not have any current active market that it is trading, or they will tell you that there's no any alternative measurement, alternative fair value measurement method to be used, right? So that way, it is, if you understand the standard way, it is telling you that, oh, it does not have a value. So if they've given you the cost of that particular biological asset, is always good, and they will give you if at times they might not give you the accumulated depreciation, they might be the one to calculate it yourself. So and maybe impairment losses, and you deduct it. So that way you can use that in the place of fair value. I hope I'm making sense. But please and please, let's also note that the entity must still measure all its other biological assets at fair value less cost to sale. If circumstances change and maybe fair value becomes reliably measurable, then it's required to switch immediately to fair value less cost to sale. Please, if situations change, right, and they cannot determine the fair value, please immediately switch to fair value less cost to sale, right? I don't know if we are making any sense at all. So what are some of the disclosure requirements in IS 41? One, it requires us to disclose aggregate gain or loss from the initial recognition of biological asset and agricultural produce and the change in fair value less cost to sale during the period. Two, do you think Ican cannot talk about some of the disclosures? They cannot tell you to list disclosure requirements. They play. You know, there's a particular diet like that in form of report, Ican have said that the entity does not know the disclosure requirements that they should put in their financial statements in regards to that particular standard, that lists the disclosure, that tell them about the disclosure requirements. And I think it was about maybe 5 marks or so, or 10 marks. I can't remember. So can you see? That's why understand, if you don't need to cram these things. If you tell me today that I should come and tell you, I have never crammed disclosure requirements in any standard, because of, ask yourself, ideally, you have used this particular thing. Imagine you are dealing with IS 60 now, and they ask you in the exam, you don't need to cram these things. I'm telling you. And they tell you that talk about some of the disclosure requirements without even reading, doing anything. You should be able to list 5, because of normally, won't you tell you put it in your disclosures that, oh, this is the model that I've actually used in measuring my in actually measuring my PPE. You have used either cost model or evaluation model, right? You tell them the type of depreciation method that you have adopted. Is it sum of the year digit? Is it straight line method? Are you not supposed to tell them about that? You will tell them assets that were revalued during the year. So that way, if you are told to talk, so I do not believe you need to cram some of these things, right? It's just understanding, and you are good to go. Ican is not hard. Ican is not for the genius. It's just for people that can strategically prepare. I've said this over and over and over and over again. I've seen mighty people fall, people on scholarship. As a matter of fact, I was lecturing SFM, Strategic Financial Management, even before I wrote SFM at the final level. And I scored 9% in my first attempt. Once I say it today, people don't believe. I scored 9% in my first, and I was already teaching people, as a matter of fact, then SFM. So, but the diet I decided to prepare strategically and prepare like I don't know it. I scored 70 something, right? Maybe 76 or so. In that particular diet, I even had marginal failure. I had 76, right? So it's very important that we prepare strategically, prepare in the right way. Don't cram. I was in a particular webinar on Sunday talking about financial analysis for how we can actually use it to enhance our business performance. And I was telling students about ratios, how we can use ratios, can use those common size, horizontal analysis, vertical analysis, trend analysis, and all of that. You will see some people, you see them cramming ratios. If I give you formula in the exam, an examiner does it, gives you all of those formulas. And in fact, it's just because of in this part of the world, we really try to make things hard. If you go to some part of the world, institutes, some exams, they will even give you the formula because they know that in real life you will have the formula to peruse through. The major thing that matters is your understanding. But we like to we like to make things really hard. So please, I'm begging you, understand the disclosure. It's paining me that I cannot solve any question here today. I have just about 2 to 3 minutes left to round off for today. So I will just I think I've been able to summarize IAS 41. Do not joke with IAS 41, please. I'm begging you. So let me just briefly talk about IFRS 6. IFRS 6. Now, IFRS 6 talks about exploration for and evaluation of mineral resources. So let's look at an overview. IFRS 6 allows entities that are engaged in the exploration and evaluation of mineral resources just to determine the accounting treatment for the expenditures. So if you are into exploration, or probably you are into the evaluation of mineral resources, then this standard is for you, right? So it's one, let's define what do we mean by exploration and evaluation expenditures. When we say you have incurred a cost in respect to evaluation or probably exploration, it involves costs incurred in the exploration and evaluation phase, and it can be capitalized or expensed, right? Now, with respect to whether you want to capitalize it or you want to expense it, is left to the entity's accounting policy, right? Now, on those particular evaluation and probably exploration assets that you have capitalized, it's very important to carry out impairment testing on them, right? So you should test for impairment, when there are facts and circumstances that have been able to suggest that their carrying amount might exceed their recoverable value or their recoverable amount. So it's very important for you to carry out impairment testing on that particular exploration and evaluation expenditures. I'm just giving you a brief summary of these standards, right? So it's very important to do. Now, can someone just list two internal indicators? When you are looking at IAS 36, there are internal and external indicators of impairment. Just tell me internal. I hope just give me two internal indicators that it has, or let me say external indicators, anyone that an asset has been impaired, right? So then we also have the disclosure requirements. The disclosure requirements talks about the accounting policies. You're able to disclose the accounting policies that you have actually adopted for those exploration and evaluation expenditures. Then you should be able to disclose the amount of assets, the liabilities, the income and expense, and also the operating and investing cash flows related to exploration and evaluation activities. So those are the okay. Someone is raising their hand. Anifowoshi Latifat. You have something to say? Okay, she left. All right, so I think that's a mistake. So those are the things we need to consider under IFRS 6. That's exploration for an evaluation of mineral resources. I cannot touch regulatory deferral account that's been explained. I cannot touch, when IES came into play, there are some particular standards that were still retained. We were using SAS before those days. Our daddies that qualified in the 2000s, 1999s, early 2000s, 2010, 2000, maybe 2009, all of that. They are still familiar with SAS. So there are some particular standards that were still kept, like the SAS, that's SAS 32, consolidated and separate financial statements, which actually provides a guide on the preparation and presentation of consolidated financial statement and separate financial statement. Although you might have to argue that what's now happening if we still have this, why are we still treating business combination, IFRS 3, treating consolidated financial statement, IES 10, IFRS 10, or why are we still treating IES 27, separate financial statement? So if you go through that, you understand why we are still treating it, right? So, and also, lastly, we have IFRS for SMEs. That's the small and medium-sized entity. There are those standards. They provide simplified accounting standards for small and medium entities that do not have public accountability. So when I say public accountability, it means they are not listed. That's literally what we are saying, right? And there are some particular key features. Those standards have been very simplified because from experience, I consult for SMEs. You notice that some of the of financial reporting. So I was saying the other time that it was maybe 26 or so. There are 35 sections. So I think that's all for today. And let me quickly display what we'll be looking at next week. So next week, we'll be looking at another very important okay, our next week topic will be complex group account. This is one I've been expecting for that. Many of us will be quite very happy that finally we are there. So this is what we are going to treat throughout from week 8, week 9. Sorry, we're in week 8, right? So week 9, week 10, right? So we have about 3 to 4 classes to actually treat that. The reason why is because we need to we know our first number 1 question, 30 marks, is coming from this area. The video lectures. Kindly read ahead and questions in the next class. Please brace up for that class. I'll be breaking complex group, how some certain key things that you need to pay attention to if you are doing complex groups, so it will make it easier for you. So that being said, we've come to the end of this class for today. I'll open the floor for us to actually ask questions, and if there's no questions, then we call it a day. Are we?
Hello, sir.
So that means that yes, everyone will be okay.
Hello, sir. Before you round up.
Yes, Mr. Edele.
Yes, sir. Please, I want to tell you that most of these lecture have not been uploaded. As well, this CR, we have only just lecture, 3 lectures there.
Okay. Wow. Only 3 lectures. So I'll call the attention of the admin to it. So they'll do something about that. Thank you. Okay, sir. No problem. I'll call the admin's attention to that. So they would help us to rectify it. I don't know what's happening. But just 3 out of 7. And this makes it 8 now. So don't worry, sir. Mr. Adede will take care of that. Is there any other thing? Addition, question, subtraction? Please prepare well. I don't want to see these faces in my class next diet. I'm seeing your faces and I don't want to see it. Please. So thank you very much. And I want to wish you guys